Now, as the week is drawing to an end, we are seeing fresh breakouts in a couple of financial instruments. This market mover session is going to be dedicated to the breakout, which we are seeing below the 1.190 level for Euro USD, and also in the equity segment, we will consider the S&P 500, which is after many days seems like is likely to change its trajectory from being bullish to maybe bearish from short to medium term perspective. I'm not really talking about from the longer term perspective. So we will take a look on that front also if there are any emerging opportunities for us. The week was quite eventful, and we had a couple of central banks announcing their monetary policy, and of course the major was the Federal Reserve, which made the market move topsy-turvy. After the announcement, we saw sharp gains in most of the equity space, but next day those gains had evaporated, and then it was mostly trading in the range. And as the week is now in its last day, we are seeing the breakout on the lower side. So this is the eventful week, which is likely to end in red for most of the equity indices and US equity indices in particular. On the data rocket, we didn't really get much releases for the European countries. Earlier in the day, we had the Bank of Japan's monetary policy announcement, and prior to that, the inflation data also came in for the Japan for the month of February. And Japan seems to be an outlier. In most of the other major economies, the concerns regarding inflations are picking up. But for the Japan, the worry is still regarding the continued deflation there. If we take a look on this month's data, which still remains in the negative territory at minus 0.4%, both in terms of year on year. And I think there is slight gain in terms of month on month, but we are paying more attention to the year on year data, and that remains worrisome. And I think that also reflected in Bank of Japan's monetary policy, where it didn't tinker with much. It has expanded the trading range for the Japanese government bonds, treasuries, but apart from that, it didn't really made any changes in the interest rate. The interest rate remains unchanged at minus 0.1%, and also the asset purchase program is going to continue as it is. The only thing is that instead of going with a consistent monthly pace of buying the bonds and ETFs, the Bank of Japan will take the decision as the things demand, as the situation unfolds. So that's the only change in language. Apart from that, it was pretty much of the same. And now we will shift our attention to the technical space, where we will consider the outlook for the Euro USD first, which has been trading in the range for most part of this week in between the 1.190 level on the lower side and 1.20 on the higher side. But as the action is unfolding in today's session and the momentum seems to be picking up after the start of European trading session, we finally have a breakout on the lower side, and that really changes the game. So we will consider that as well. And then comes the S&P 500. As I said here also, the trading range now seems to be expanding after pretty much narrow trading for most of the week, and we will also consider if there are any emerging opportunities to take advantage of in the S&P 500. So let's start with the Euro USD technical outlook first. This is the daily time frame chart, and here for quite a while now, the Euro USD's major trend has been bearish, and I have said it a couple of times in this week itself. Even we had talked about the shorting opportunities a couple of times in past week or two, and this time around also it's not really different. The only thing that is different is, of course, the price levels, which we need to now consider moving forward. But apart from that, the trend remains the same, and which is the bearishness. And I think as we are looking at the fresh breakout here, pretty much we can expect the next move to be around this prior swing low, which is there around 1.18 level, and in next couple of sessions, of course, it is likely to happen in the next week only. I'm not really expecting any big 100 pips move in today's session. Of course, it can happen, but I'm not anticipating that. And if you consider both these technical parameters, the regression curve and the central pivot point, sorry, the pivot point series as a whole, the central pivot point is not really in play in today's session. The regression curve is now continuing to remain inclined on this lower side. It is pointing south, and as the price action is now picking the momentum on the lower side, it is likely to steepen further. It was almost flat 2 weeks back, but now as the price action has moved to the lower side, it is likely to steepen pretty much. And as I said, we can target the prior swing low. And then if you consider this month's second support, it is there around 1.180 level itself. So that is going to be next price level to watch out for. And if we have this sustained breakout, then I think we can continue to look for charting opportunities even in today's session, though it is going to be fairly difficult as we have already seen this move, and we don't really have much time left. So by the time we come back on Monday, I think there might be better opportunities, but of course, we need to be mindful of some key levels which we need to watch out for. And one of that key level is going to be the first support of this month's pivot point series. It was there where we saw the turnaround in today's session. Earlier in the day, the Euro USD did try to hold on to these 1.19 and tried to climb back, but it didn't really succeed. And then after that, it has been all the downhill, all move on the lower side. And now as the things stand, we can consider the same price area of around 1.193 to be the major resistance zone on the higher side. So if we are fortunate enough to get the entry anywhere closer to that again, maybe on Monday's session, then we should really look forward to it. But apart from that, there is not much we can do as the train has already left the station. And if you have missed out on the opportunity of shorting the Euro USD earlier in the day, then I think you should see, or you can wait. And if you are fortunate enough, I will repeat here. And if you can get the entry anywhere near 1.190 or little above that, and that will reduce the stop loss range. We don't really have to keep much wider stop loss in case we are going to enter closer to the resistance zone. So that's why it's important to look for the entry where the stop loss will be least. Otherwise, you can go for fresh trade anywhere, but that doesn't really optimize the risk reward ratio, and that's a important criteria while considering any trading opportunity. So from that perspective, this price range, this confluence area of 50, 100 and 200 SMA still remains important, and as long as price action is unfolding below it, the major trend will remain bearish, and we will have to look for the opportunity to get the entry anywhere closer to that, as close as possible. And we can't really be certain, but let's see how things will unfold. And then on the lower side, the price target of even around 1.180 can be expected, but that will take some time, and it might take a couple of days, so we will have to be prepared for that as well. Now moving on to the equity space, where the instrument of S&P 500 is the instrument of choice for today's session. And here, yesterday's sharp sell-off has really changed the game for the S&P 500. Earlier, it was climbing towards the 4,000 level, but now it looks like that we might finally see the S&P 500 correcting and even dipping toward these 38.2% Fibonacci retracement, or even below that. If things continue this way, we can even expect the 61.8% Fibonacci retracement of its rally, starting closer to these 3,700 and going all the way near 4,000 mark. So now we will have to focus more on shorting opportunities than looking for buying opportunities in the S&P 500. But here we can't really expect the S&P 500 to give up all these gains suddenly. It will take some time, and I think the moves are likely to be much tepid, and we will have to be much patient to live with that, as we can't really expect any big sharp move on the lower side. And instead of that, we should be looking forward to any range bound trading, and within that the undertone is likely to remain on the bearish side. So if you want to focus on today's trading session, then I think the shorting opportunity is still there, as long as you can get the entry closer to this consolidation phase levels of around 3920, and the stop loss is going to remain closer to these first resistance, the price range of around 3950. And both these technical parameters, the regression curve as well as the pivot point series, are still continuing to point towards northward. That is, the undertone remains bullish from medium to longer term perspective. But here we are looking at the possible turnaround, and if we consider this price action, it looks like a formation of head and shoulder, though exactly not in order, but still the consolidation phase has been pretty long, almost a week, and in which the range was fairly narrow till we got the breakout on the lower side in today's session. So if we want to look for any optimum risk reward ratio for getting the fresh entry, then I think the 200 SMA price range of around 3930 is going to be of high importance, and on top of that we have the 50 and 100 SMA around 3950. So from these levels we can look for fresh opportunities. And as I said while explaining the 4 hourly chart, also we have to utilize these 200 SMA price range consolidation, the price levels of around 3930 to 3920 price band, which is I am expecting to act as a near term resistance. And we can keep the stop loss anywhere closer to this confluence area of 50 and 100 SMA on the higher side. So that is going to cover our risk of around 1%. And on the lower side, we will have to look for the reward of at least 2% to make sure that the risk reward ratio is in order of at least 1:2. And if you want to hold on to your positioning, you can even extend the target price. So that possibility is always there. So that's it from my side for today's session. If any of you have any idea or any query to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead and weekend. See you on Monday. Till then, goodbye.